What's up, everybody? Welcome back. Hope you had a good Thanksgiving. If you're in the States, and I took a week off to go visit some family and extended family, but come back and we got a lot of stuff to talk about this week. The topic I put on the docket was Bitcoin on-chain analysis, and I want to just briefly talk about that because it's made somewhat of a resurgence, I've noticed, in Bitcoin maxi circles. And I say resurgence because it was a big, very popular thing that people would talk about on social media throughout 2022. You know, that this bear trend of, Bitcoin, which surely we're over, right? Because now it's up 100 and what? How much are we up this year? By now, info line. Year to date, we can say that we're up, was it 127% year to date on Bitcoin. So we're going to talk about that. And as always, if you guys have anything to look at, symbols or instruments, post them in the chat. I'm here for you guys. I do this every week. I stream it on Discord, TradingView, which I love and I use for everything. By the way, I hope you took advantage of their Black Friday special. I don't get, they gave me like a $15 credit for whatever for people that use my referral link, but I mean, I didn't push it that hard. They asked me to personally, though. But that's about the only endorsement that I have. And it's just because it's so awesome. You guys don't understand that I'm a boomer. I used to have to download this Bitcoin OHLC and manually build charts of it. So TradingView came along and just revolutionized that. And it's from crypto primarily. So if you like crypto, if you like trading and using it, it's worth it. But I mainly also trade in stocks and everything else that trades. So at some point, we're going to talk about market update, because we're starting to get into that time. It's been a quick year, honestly, where we get into that Santa Claus rally that people are going to start talking about. And if anything, it may have actually started back at the end of October. So do a little market update after we talk about Bitcoin for a little bit. But as always, stream this on Discord, TradingView, YouTube, and like to see a lot of familiar faces. And here, what we like to do is we like to share ideas. I sort of use this live stream and hope people get the value from it as being a sort of idea generation. And so there's been a lot of good ideas that have come out of our chat. So if you guys have something that you're interested in looking at, please, by all means, post it in the chat. And because I can't look at every single symbol. So what's going on? Bjorn 2Z, short wing, NVIDIA, Tesla. I have to question, are you just wanting to short things that are strong? Because honestly, that's not necessarily the best thing to do. These things are usually strong for a reason. And look, trust me, I am super contrarian. Like, if there's something that everyone is saying, I'm automatically going to be skeptical of it. And so to go against the trend, love it. I think that's where big money's being made. But as far as shorting NVIDIA goes, I just don't think that's necessarily a good idea. I mean, at some point, what goes up must come down. But I've been looking to short it. Actually, you know what? Let me revisit that when we start talking about stocks here in a bit, because I just kind of saw something now that I'm going back and catching up on 2 weeks of weekly closes. As far as shorting Tesla, I'm going to tell you that's a flat out no right there, because I'm a Tesla maxi. But anyway, thank you though for that. We'll definitely take a look at it. If you got things to look at, go ahead and pop them in the chat while I talk a little bit, and we'll talk about it here in just a second. So good day to you, Golden Goose. Yep, we'll take a look at that in just a second. All right, so since we've already got some stuff to talk about, let me go ahead and go ramble on a bit about what I want to talk about, which is on-chain analysis. Now, let's bring up like a dictionary definition to kind of explain it. My interpretation of on-chain analysis is probably not Bitcoin specific, because people will use it for Ethereum, but Bitcoin on-chain analysis is basically where people look at the blockchain, look at the addresses, the Bitcoin that are in them, and then try to ascertain a profile or an opinion about the supply and the demand of Bitcoin. In other words, there's only a limited supply of Bitcoin that exists, will ever exist, And when people buy Bitcoin, it goes into a wallet, and we can see Bitcoin going into a wallet address, public address, and there it will sit, and it will sit for ever how long. I mean, we can some like the kind I lost on a hard drive a decade ago will sit there forever, and there's some that is like that. And so every bit of Bitcoin that gets taken out of circulation can't be sold. That's pretty logical. Makes a lot of sense. And therefore, when you see periods like we're in right now, where Bitcoin is being hodled more than it's being moved, the on-chain analysis folks, and it kind of has a little bit of a following. It's very, very popular because it makes sense. If you're going to sit there and be a hodler of Bitcoin or someone that only trades one side, then you're going to really gravitate towards any analysis that's going to tell you that you're right. And so this is where we stand right now as we go into the end of November. And this is from Glassnode. And what it does is it's taking at the top we have the size of accounts of Bitcoin, basically, small accounts to big accounts. In other words, I shouldn't say accounts, I'll say public addresses. So in Bitcoin with less than one Bitcoin in a wallet, this is how many they're accumulating. I need to cohorts by PTC. So this is what basically showing the volume and the volatility of movement and things like that. And so as we come into this late stage, and the way you read this chart intuitively is top to bottom. And I think that's something that a lot of Bitcoin people are starting to do. They're reading this as, oh, I'm not just saying that. That's how it's been presented to me. If you look at the blue, that means that they are moving less. There's less movement. They've been in these addresses for longer, and thus people are hodling as we get up to this high, this 39K high that we hit just today. And they take that to mean that we're going to see an explosion in price from this point. Well, I really like to know, where were the Bitcoin maxis that were using on-chain analysis back on March the 9th of this year? So in March the 9th of this year, take off Ichimoku, we'll use that in just a second. And March the 9th of this year, which is in part of that chart right there, was right here. That was on the banking FUD. And that also happened to be a 50% retracement of Bitcoin year to date, or from the bottom of the FTX crash, also matched with the Ichimoku bottom of the cloud. And a lot of people that are in the Bitcoin maxi space, they poo-poo technical analysis because, frankly, I think the reason that a lot of Bitcoin people or crypto people or people in general poo-poo Bitcoin or any kind of technical analysis is the Dunning-Kruger effect. If you're not familiar with what the Dunning-Kruger effect is, it's basically, let me pull up a chart of it. Dunning-Kruger. What you'll find is a lot of people that have Twitter accounts, they'll get some technical analysis, they'll put some lines on the chart, and they'll be about a year into it, and they'll be at the peak of their enthusiasm about it, and they'll start trading based on it, and they'll lose a bunch of money, and then they'll go into the valley of despair, and then they'll start posting memes about, let's see if I can already close that one, how trading is useless and you should just hodl. There's no way to optimize your entries or exits in Bitcoin. You should just buy it, hold it, and just ignore it. But I objectively think, and I have, through my postings this year on Bitcoin, hopefully demonstrated that there have been good times to buy Bitcoin, namely March the 9th, and of course, back on January the 13th, when Bitcoin broke out of the Ichimoku cloud on the daily. These were all excellent points to buy Bitcoin. Yes, they're in the past, but we can look at these examples of these two methods and learn from it and go forward into the future and hopefully make better decisions. And so I really have to throw some shade on the on-chain analysis, because while all this is going on, while they are citing this point in time as a period where, according to on-chain analysis, is the best time to buy Bitcoin because everyone's hodling and therefore there's low supply, which we all, well, some of us went to college. If you didn't, basically, they teach you that, supply, demand and price. There's these charts and everything. TLDR: when there's low supply, the price will go up. Makes sense. But I see this chart in a completely different way. The way that I see that chart needing to be read is like this. We need to flip it. See, I've been doing this trading market thing for about a decade now, and I've seen things rise and fall, including Bitcoin. I've been doing Bitcoin for over 10 years now. I bought my first Bitcoin in 2011. Not 2010, but 2011. Which means I bought it at, I bought it for $20. And by the way, I saw the Bitcoin then go down to $1.94, almost a 95% decrease in the value of my holdings. So yeah, stupid me for putting it into magic internet money. But I've seen these things before, and I think we need to flip this. What you're presuming by that original chart is that people's opinions are the accumulation of Bitcoin, what they're doing, but they're actually people's actions. And I believe, this is how I use a thesaurus to define price action. The price of something is people's opinions. And so all through the year, people's opinions have been kind of skeptical, kind of, a little, Bitcoin, it was this thing. I lost a bunch of money on it. I don't want to care anything about it. And now it's resurged 125%. And so now people's opinions are very happy about it because the price is up. And so now people's actions are to hold it and not sell it, just like people would do at the top of any bull market that is growing into maturity and starting to get a little bit enthusiastic and perhaps a little over enthusiastic. I had someone come to my Discord just this week, good old friend of mine, and he posted his P&L for his Bitcoin this year. And he knew why he was posting it too. He knew, and he even said it. He said, "Hey man, I just thought I'd give you the retail sentiment right now." I mean, he said, "Yeah, if you're bragging, you should be taking profits." And I just sit here with all these Bitcoin buddies of mine, and I love them because they're my people basically. They're people I've known the most for the last decade, and they don't want me to come and say. They were happy to just sit there and just nod their heads when I said, "Hey, you should buy Bitcoin here and you should buy Bitcoin here," because many of them are going to buy it anyway. But when I come in here and I start seeing at a resistance on Bitcoin, that resistance being from the all-time high to here, and the next resistance being, we've already passed it from here to here. That was back down here. So basically, Bitcoin is bullish. It is bullish on the weekly. It's broken out on the weekly. But probably in this move that we're seeing right here, 42K is going to be where we're going to find the next logical resistance, and that's based on the all-time high down to the low right here. It's the same reason that we found resistance back in July here, because that was the 50% of the March high to the low there. And so Bitcoin has been incredibly adherent to 50% retracements all year long. And maybe that will change, but I'm not going to bank on it doing it because it is just so useful as far as finding trades in any instrument. It's the one thing I trust the most. And so, as we're coming into this realm right here, people are like, "Oh, you need to buy. You need to." Oh, people aren't. People that already own their Bitcoin are saying buy, buy, buy because they want you to pump up the prices. Maybe I'm wrong. Maybe we are going to see this ETF lifted to incredible heights. But this is the future that I see. The future that I see based on my experience, my understanding of markets, not just Bitcoin, not just the current year of stocks, but 100 years of market history about euphoria and especially buy the rumor, sell the news. This ETF, I think I saw something today. I'm going to have to bring that. Let me bring that up. Actually, 1 second. Pardon me, guys. 1 second. I got to go back to Telegram and find that. Hold on. Come on, Telegram, load up. There we go. There's a tweet from earlier. Let's see. Yeah, there we go. So the ETF launch, and everybody has their opinions on when it's going to be. This person says now official, but the window for the ETF going to launch is going to be somewhere between January the 5th and January the 10th, which is still another month to wait. But that's going to be what people are saying now is going to be like the final, it either happens or it doesn't. This gives plenty of time for Bitcoin to reach that place right there. Now, that's quite a big, quick appreciation. But there's just so much more risk baked into a trend that looks like this. Now, I know the argument for Bitcoin maxis is going to be there is no risk because Bitcoin is going to take over the financial system because reasons. I used to really believe that Bitcoin was going to bring about some change, but now everyone really just wants boomers to buy Bitcoin with an ETF. And boomers that couldn't figure out how to use Bitcoin, or they surely can't figure out how to use it or make a wallet, I just don't see how they're going to get much benefit from it. So I'm going to stay out of that. I mean, maybe that will, maybe it won't. But primarily Bitcoin, I think we got to look at it honestly now as a means of personal wealth generation. It's a game to be played, unfortunately, now. And right now, if you're going to play the game, you should have played it back in January. You should have played it back in March. And to kind of bring everything back together, one of the problems I have with on-chain analysis is, like I said, 2022. And I pulled this up by just doing a search in Google for on-chain analysis from Q1 2022. And people would write these very long, detailed analyses of Bitcoin with lots of lines, talking about the supply. And it all just kind of makes sense. But every time I'd see Bitcoin drop a little bit or Bitcoin kind of stagnate during 2022, the bearish year, someone would come and challenge it saying like, well, on-chain analysis says that Bitcoin's going to go up. I ever read an on-chain analysis that was anything but bullish. And that's my primary critique of on-chain analysis. It's very detailed. It sounds very smart. I think it's just an overcomplication of what was pretty apparent to me, that Bitcoin's past bear cycles have been 70 to 90%. And so it was that we had a 77% correction finally. I think that if you would have just presumed from the history of price action that Bitcoin was going to do something similar, then you would know that at any point in this down move, you could probably wait until 75% and be a lot better off. Now, what does history tell us about this current movement up? Like I said, the next level that I'm going to be looking for is going to be the 50% retracement. It looks like it really wants to get up there to 42. It really does. Really does. But I still think this is a very dangerous time. A very dangerous time to buy. I think that once the ETF launches, it's going to get a little pump, probably going to kiss that level, and then it's going to fall off. And then if you ask people out there, they'll tell you, I'm just being honest, what I've heard, that the halvening is coming. And because of the supply limitation, the halvening is going to be yet another bullish run. And everyone that buys Bitcoin now, you're going to be so rich in the future, you won't know what to do with all that money. But the people that say that, they already own a lot of Bitcoin. And they probably own a lot of Bitcoin at basically break even right now, considering they probably bought it, around here and here, and here. So I think there's a lot of memeing going on. But for me, the risk reward to get to 42 from here is not worth it. I'd rather put my money into other things, even longer term things. I mean, I had some good trades here from here, and I got out of them about right here. Am I missing out on this bull trend? Yes. Am I bitter about it? No. But that is the criticism I get. I'm bitter because I don't have enough money. I sit here and hang out with you guys on Friday instead of being at work. So let that speak. All right, let's catch up with the chat and whatnot. That's my ramblings for this week. Listen again, guys. I stream this every Friday on Discord, TradingView, which I love and I use. And they don't pay me to say that. I think TradingView is awesome. It really, really is. Like I said, I used to have to do all this OHLC, open, high, low, close data manually in Sierra charts. Not exactly manually. I had to draw it out like people did 100 years ago. But I still had to download it and then import it. And it's just so much more fun to do it just with circles and lines and stuff like that. All right. Let me get my windows back up again. So if you've got symbols to look at, remember, guys, I do this for you guys and me for idea generation. So post it in Discord and or YouTube chat or TradingView. Let's go and start looking at some stuff. So originally, Bjorn, about 20 minutes ago, he said he wanted to short Wing. And by the way, guys, I talk about crypto and stocks. And frankly, I really don't see any difference. They're all instruments to trade. And that's one of the key things that's kind of moved me philosophically away from this Bitcoin maximalism perspective. Because I don't know if you guys know this or not, but Lightning Network was billed as the solution, the fix, the layer 2 solution. Bitcoin Core, the blockchain being layer 1. But Lightning Network was going to be that software that anyone could use to make exchanging Bitcoin fast and cheap. Right now, let's see. I got to talk about Bitcoin just a little bit more. Not throwing shade, because understand I love the premise of Bitcoin. It's just not the same Bitcoin that I bought in 2 years ago. So let's see. Average cost of Bitcoin transaction. So right now, the current fee is $6.46. Huh, wow. And earlier it was earlier this month it was about is this in dollars? Yeah. Wow. Earlier this month it was about $18.67. Wow. That's a lot. So in other words, to make a Bitcoin transaction it cost $6.50. So Bitcoin, good for moving lots and lots of money, but not so good for buying coffee. And I wonder if this is because of Lightning Network. Okay, so I still can't get an expert, to sit down and talk to me about Lightning Network. What's happened with Lightning Network? I mean, I have two very good friends that are smarter than me. That one of them has basically dedicated his professional career to something tangential to Lightning Network. He works for a company that's really trying to leverage it. And I asked him about it, a week or two ago. Since I had a live stream. Or maybe it was, and I talked about it then. But he basically told me, Lightning Network is great if you know the person you're transacting with. And I think that what happened was that a vulnerability was exposed where obviously people could steal people's Lightning Network Bitcoin, and that's not good. And he said that basically it was a really good idea, but it's not going to be the end-all be-all. It has its problems. People always knew that it has problems, but they're going to have to start looking at a new way to solve the scaling problem of Bitcoin. And the scaling problem is basically this. It's the cost of every transaction of Bitcoin. It's also the speed. I mean, the speed's definitely not instant. It's not forever, but if you pay the full price, you'll get confirmed in a matter of minutes. If you pay less, you get put in a queue. And if you pay nothing, you'll probably never get confirmed at this price. Pay more, you'll get confirmed faster potentially. But this is not good for lubricating world commerce. And a lot of Bitcoin maximalists, basically, they want to maximize the use of Bitcoin in everything, not just their daily lives, but the world. They really want to see the Bitcoin standard take over. No one uses dollars anymore because fiat is evil. But it's not there, and it's many, many years away. And so now with this ETF launching, rather than people focusing on improving the tech of Bitcoin, which is not going to be improved because it's a huge political debate. You're not going to get the miners who've already invested millions, perhaps billions, into their ASIC hardware to mine Bitcoin as it is. They're not going to approve of a larger block size because all of their hardware they use to mine Bitcoin is going to be worthless at that point because it's made specifically for mining blocks of a certain size. That's not going to change. And so the tech of Bitcoin has reached sort of an impasse right now. And things are getting appreciably not as good. And so basically the question is, if the dollar were to just fail tomorrow, would Bitcoin be able to take it up? No. And so now what have we done? Well, we've chosen to put our hopes on this ETF. We've chosen to put our hopes on boomers buying Bitcoin to get this price higher so that we can all buy our Lambos. And I find that just kind of obscene. That's not the point. The point of Bitcoin was not, but now is, personal wealth generation. Getting people to buy our Bitcoin. Getting boomers with all their money in their retirement portfolios to finally start paying us millennials and Zoomers some money for our magic internet money. That's the meme right now, and I just can't get behind it. I just can't get behind it. Bitcoin doesn't solve anything now, and no business is using it to generate more wealth. It's just accumulating wealth. But anyway, that's getting a little, yeah. Let's talk about making some money. All right, let's look at some things. Again, put the things in the chat. We'll take a look at it in just a second. So Wingstop, I think that's what it is a Wingstop. We want to short this? I don't. Let me tell you, though, how I would want to short something. So either I use Ichimoku or I use my spike indicator, which is free, by the way, guys. It helps me find, I got that set too low. Find false breakouts. But really all it does in this case is it gives me a red line. See that red line? Really simple. It's not a moving average. It's a moving 50-point retracement. Let me give a little tutorial on that why I am. So if we take the high to here and we go back 9 bars, that's 1, 2, 3, 4, 5, 6, 7, 8, 9. That's what's going to give us that red line as it is, okay? And then as the bars go back, if a new low is not put in, then the bar moves. That's why it's down here. Either way, that's what I use as my trigger for anything. And when I'm looking at a big bullish trend or big bearish trend, I want to see a bar close below. That was a nasty looking circle. I want to see a bar close below that red line before I even think about doing anything bearish. And so if I look on the daily of this Wingstop right here, I'm not convinced that I need to short that. I think you're just trying to be contrarian for the sake of contrarian. I love being contrarian for the sake of contrarian. But I would rather try to find something maybe like, it's a little late now, but Disney's been in the news, not for good reasons, but, going back a couple of weeks of live streams, people would come on and they would say like, hey, I want to short Disney. I'm like, well, you realize that you're trying to short Disney when everyone is trying to short Disney, and you're coming up on the COVID low. I mean, I remember back in this time period, back in August and June, people were wanting to short Disney, and they got a little bit of that out to that COVID low, but man, it is just launched right off of that COVID low. So if you want to go against people saying something or believing something or buying something, try to have a reason. And so shorting all-time highs, like in the case of Wingstop or NVIDIA, we'll look at the next one. NVIDIA looks a little bit different. I did want to talk about that a little bit. So that's a different story. Now, you'll notice I've got all these lines up here from my past analysis and past live streams. Let me go back in time and give you the story of NVIDIA. NVIDIA is a different case. Now, NVIDIA, I watched just like everyone else, and they had earnings back in August. And that led me to see a potential false breakout because you had a past all-time high that is set back in July, and then you have weekly bar like this in August on earnings, it's like, look at that. That's a false breakout. So I watched this very intently, very intently. I didn't see a short, especially since the following week then closed to break the past all-time high. So I got a little skeptical about shorting it, so I didn't. I like to see the setup I want to see, and I didn't see it. I didn't seize what I sees. And so now what you have is, well, that would have been a very unfortunate short that I did not take and avoided, even though it kind of poked and made you think it was going to go. Now you come up and you get something different. But I just noticed from looking at it that we're getting a little bit of a double top here. It's not really a false breakout that I want to jump in short on, but we're starting to see some slowdown in the price of NVIDIA. I'm still watching it. If you shorted it now, I would probably say, Knuckles, good to go against what people are saying about AI. You may be handsomely rewarded, but I'm going to wait for a good technical setup. And I'm not sure what that's going to look like, but right now, not trying to short it. In fact, it looks like on this morning, they had a bullish spike to go back up. So essentially what you want to look at coming in the future now is a breakdown of the 460 level. That would be a good breakout, I would say, from this trend to come down. If we look at this in the local sense of 50% retracements, it has a good little bit of room to get down to there, maybe 448. And if it doesn't hold that, this trend's going to break. So be watching for that. Tesla, I think some friends in my other friendly Discord were trying to short it today, and I said nothing because, look, I was listening to that infamous Elon speech from this week. A bunch of my friends were sending me a message about how horrible Elon was. He's really honestly getting the Trump treatment in terms of people maligning, and you can whatever your opinion is, positive or negative. There's a concerted effort, I believe, to make people not like Elon, and I think it's because they don't actually listen to what he says. I'm not going to say the words that people are accusing him of, but when you say that he's anti something, the guy's trying to get us past a Fermi paradox limit, which is being a one planet species. He's trying to get us off this planet, get over on Mars, get a colony set up, so that we don't die from a natural or man-made event. So I don't understand how you can say that he is anti one group of humans if he's trying to objectively help all of humanity. But you can disagree, and I think that you need to go listen to his autistic ramblings a little bit more. But more to the point of trading, he was talking about how the Tesla supercharging network, but Tesla is basically multiple companies in one. And the Tesla supercharging network in itself would be a Fortune 500 company. I think a live stream or two ago, some person came in and asked me what I thought about some charging company that they bought back in, like, what was one of those, Plug Power maybe? I don't think it was Plug, maybe it was, but yeah, it was a charging company that was all the rage back in 2021, and unfortunately this person probably bought it somewhere in that, and now they come to my live stream and ask me what do I think. Well, what I think is this: you got Mercedes, you got Ford, you got GM. They're all going to license the charging network of Tesla. I, as a Tesla owner, I get free supercharging. So I'm not going to use your network. And frankly, most of the paid chargers I've seen are only level 2 charging ports. I've never seen a level 3 supercharger port. Maybe they're out there. Maybe I just don't use them and I don't know. But Tesla's already won. I'm sorry. And you need a ubiquitous charging standard. And now auto manufacturers are going to start shifting to the North American charging standard. I think it stands for NACS. And that's what Elon intended. He wanted to have a ubiquitous charging standard, kind of like how you have the same, pump. You go to the gas station, you don't want to have 6 different pumps in front of you, because you may be like some person I know who at one point put diesel in their car, They said it was really, really hard to get it in there, but they finally got it in there. You know, why is this thing so hard to put in my car? And yeah, so so you don't want that. You want to have a single ubiquitous thing, so that even it's really hard to mess it up. And I don't see these companies going to be able to do that. That's why they're sitting at like single digits, because the game's already been won. And so going back to Tesla though, yes, I'm a little bit of a Tesla maxi like Bitcoin maxis are, but I think that with their supercharging network, I think with their AI, because guys and girls, we have cars that can drive themselves. Don't listen to what people tell you when they say, "Oh, we're not there yet." We are. Like if you live in Georgia, I'll give you a test drive. I'll let you sit in the driver's seat. I'll handcuff you, and not in a kind of a fetish way, but just I'll handcuff you behind your back, and you'll sit there and be like, "Ah, the car's driving." Yes, it is. It is. It is. It is. It will. It's fine. And once you trust it, you'll figure it out that the only thing that is bad about it is sometimes it's more cautious than a human would be. He'll sit there at the stop sign and kind of like inch up, whereas you'd be like, "Go, go Tesla, come on, go." So I do have to take over when it derps out, but it doesn't derp out in ways that scare me. It derps out in ways that are like, just go Tesla. Fine, I'll take the risk. That's the way it derps out. But we're there. We are there. And Tesla already has years ahead of other companies as far as building a database for their cars to drive. That being said, let me take that to a side and let me fully evaluate a short of Tesla. So messy chart. I'm very long from 200, so I'm speaking my book. Would I like to see this thing just kind of shoot up to 400 or something? Yes, but right now it's holding a resistance level. Let's call it the 50% from the year's high down to the low here in October. And so that seems to be 246.68. Is that any kind of a false breakout yet? No, that's a pretty solid resistance hold so far. So let's just see what happens around this level. But what are you trying to do shorting Tesla? I mean, I really got to ask that question. Do you just not like Elon? Like, I think you're wrong. I think you're wrong to not like Elon. I think he likes you, and you need to give him a more fair shake. But I don't see a trade here, long or short, basically. The long was this year, and now that we're coming close to the end of the year, I'm going to speak more about it. You know, the year in review, Tesla 160 was where you should have bought it. I bought a little bit, Tesla, and I really wanted more once I owned a Tesla, and so Tesla 200 was the next level to buy, and so I did. And so I think now and in the future, you're going to want to be long from 160 and 200. I know we can't go back in time and do it. We can only learn from using this technique, but I think those are going to be the right plays for this year and going into the future. It's kind of like I thought I got a notification on my Robinhood app, which I barely use, but Amazon, I think I probably bought some shares on that account as well earlier this year, but Amazon buying it at the 50% retracement of the 20-year 50% from the low of 2001 to the high of 2021. That level was 94.46. It was not perfect, but 20 years from now, I'm gonna get to use this example for decades, basically. For hey, look, 50% works on Amazon. I actually, and what's funny is actually I really appreciate contrarian ideas, because I think I talked about this on my Discord, and someone came in and said like, yeah, but you know what? I think retail is going to make a resurgence. I'm like, okay, fine. I like to go into a store and get something. I actually don't own an Amazon Prime myself. I'm kind of a forced, self-imposed Luddite there. It's my way of resisting. Okay, all right. I just asked my girlfriend to order it with her Prime if I want something, but whatever. I recognize that Amazon is Amazon. Like go order something online from someplace else and have it delivered more cheaply. It is. Amazon is Amazon. And if you have a stock portfolio, you need to own some. It's not going away. It's not going away in 10 years. There's nothing that's going to really disrupt it that I can see now. There's nothing potentially. So just anyway, 50%. Hindsight. But yeah. But don't short things just because they're going up. Like, if you shorted Amazon right now, I mean, what are you trying to do? What are you saying? If you're trying to capture like some short-term price action based on your own method of analysis, all about that. But if you come to me and you say like, hey, these stocks are really high, I don't think they should be that high. Well, that's your opinion, man. Like, give me a reason. Give me a reason. Give me a reason. All right, let's see. Golden Goose Baba. I did have a great Thanksgiving. I ate a lot. I cooked a lot too. Ooh, you know, I had this kind of tongue-in-cheek video that I did about Amazon. Yeah, was it back in 2021? Where I need to find that. Jen, can you look up that Baba YouTube video for mine on my history while I chat about it? You'll know it when you see it. It's got like a symbol built into the logo. It's from probably about 2021. But Baba is coming down to. Can you find it? Thank you. And yeah, so it looks like it's all-time low right here. Not quite, but let's just call it coming down to its all-time low back in October of last year. Okay, I remember I had a lot of friends buying it on, basically pullbacks right here. Yeah, thanks a lot. So this was from back in. Oof, it's a long time ago because Bitcoin, not Bitcoin. I still got Bitcoin in the brain. This was from. Is it 2020 or 2021? So this is.
So I've had some friends.
Yeah, I had some friends that were buying it around 266, and essentially I decided to go through and do some technical analysis on it to explain to people why they lost on Alibaba. And the basic premise that I was trying to get at by doing this technical analysis, and hopefully you guys can very quickly get to the kind of the tongue-in-cheek thing that I was trying to say here, even though I was like adding all this like verbose BS on top of it for price action, was you're investing in a Chinese company, and China doesn't. It's not really big on stocks and this whole capitalism thing. And Jack Ma, who he was the CEO or the owner of of Baba. He had to disappear for a while, and people were wondering if the Chinese government hadn't made him disappear. I think he came back, but he got a little too. I think he got a little too big for his britches, as we'd say here in the South. And the Chinese Communist Party did not really appreciate that. And I think this was right around the time that Baba was going to launch this financial product of theirs or something. I'm misremembering history here because I didn't follow it very much at the time. But I'm going to be pretty much negative on any Chinese company because in my decade of trading, I've never really invested in any Chinese companies, but I've always sat and read the news. And there's been at least 2 instances of Chinese stock market crashes that were brought upon by some kind of intervention by the Chinese Communist Party, where their citizens were getting a little too frothy, and they don't want their citizens to be too rich. I'm giving my opinion there, but they've intervened in not a very positive way for investors. And so while I think that a lot of people see a bunch of potential gain in China, the risk reward there, I think the risk is just so high because you have that extra. In the case of Bob, it was a Chinese government like not letting them launch a product or expand their business because it was going to get a little too politically, well. Let me not speak to what's going on in China because I'm not an expert. But what I do know is that I don't want to have anything to do with a Chinese company. There's plenty of U.S. companies out there that are a lot more capitalist friendly that I can put my money into. And I don't really care to add that extra layer of risk from the Chinese government. So while I think you may look at this from just a perspective of, hey, it's at a low, buying something low is good, I'm going to be fundamentally opposed to getting in something like Baba because I've had a lot of friends that lost money on it when I was making. That was 266 that I was making that video. Oof. Yeah, you were still up there close to the high by comparison. I haven't looked at Baba honestly in like 2 years. I've just been, I have no reason to continue. All right. FL, Foot Locker. I would ask, do you go buy your shoes at Foot Locker? Again, kind of going to simple fundamentals here. I don't see a trade here. I don't see any kind of price structure. If anything, it's making lower highs and lower lows. No, I don't see anything here. ON on. I know that's a very trendy shoe company. I bet the price of that's going to be a little bit better. Ugh. Okay, that looks like a startup. I don't have enough. Well, that's a monthly chart. Let's see. From the low to here, I think there was a good trade to get in. Looks like in the past, where my things go? 50% level here. It's getting kind of wonky though, and I'd say it's bullish. I'd say as long as you hold that 50%, it's not really clean, but I see what it did. It sort of cheated itself down to this high from August of last year, August 2022. I'd say those are your supports, and as long as it holds there, it's good to be bullish on up. I like that a little better. I see some reason for it to sustain this year's trend, kind of like Tesla's doing, honestly. All right. Let's see. Okay. To summarize, Baba, Foot Locker, I see nothing there, but on, I would say bullish. I'd say you'd be good to hold on to that. You probably missed your opportunity to buy it pretty cheaply back in October, November, which is basically going to be the case of all stocks. Look, let me speak to that. All year long, people have been living in the past year. All year long, all 2023, people have been living as if we're in 2022. And in 2022, people were living as if they were in 2021. In other words, in 2022, people were trying to BTFD, buy every effing dip, and coming up short. And now that we have a year of bear market, this year everyone's been like, oh, market going to crash again. S&P going to go to double digits. Ooh, fear. And yet it keeps on going higher, especially in March of this year when we had that banking FUD. I mean, that was probably, and I've said it all year long, the best time to buy stocks was when there was that being greedy when other people were fearful moment in time that Warren Buffett talks about. Yeah. And then October, we had this mess right here where people were like, going to cash because I'm so much smarter. And whoops. Now we're in the Santa Claus rally. We're in that rally that's historically, statistically going to push us into ever higher into the year. And the opportunity to buy was back there in October. And so it's going to be very difficult to buy anything now because we're coming up on the yearly high. It's already been up multiple weeks in a row. And January is, I don't know if guys remember January 2022, but that's where it all started almost over a year ago. So pretty much the positions, I mean, there's going to be opportunity. I always believe there's opportunity every day. But the times to buy this year were March. I think that was pretty easy to see if you're a contrarian, to look at everyone being fearful of these two crypto-focused banks, going out of business. And everyone's saying that translates into the world going to collapse. I think that being able to kind of look through that should have been pretty easy for you guys. If it's not, just when everyone thinks that something's going to end, or just take an objective look at it. Like, okay, what's actually happening here? And then if a bunch of these people that sell gold are now like, putting sirens on their profiles and trying to make you buy gold from them, because the world's about to collapse, it's to be a little more skeptical. October, though, was a little bit, I didn't really know what was going on in October. Honestly, it wasn't really apparent to me what was causing that down move. And that's actually a kind of a little bit of a filter that you should use when the stock market is going down and there's not really anything particularly bad going on, that you can't really put your finger on it, then it's probably just a pullback. Don't know how to articulate it better than that. But in the times where I've seen, the market going down and it not completely, crash. Like think about we're so far away from 2008. It's just ridiculous. Like I don't even remember 2008. But in COVID, when the market went down 30, 40%, we all knew why. There was a reason. And so when the market starts going down, let's say from the high in July down to here, it's about 11% of a pullback. But let's just say that we're in about the 8% range at the beginning of October, and we look at the news and we look for people to explain to us why the market's going down. They're going to say like, war 1,000 miles away, inflation coming down but still high. They're trying to piece together all these reasons that really don't matter to your neighbor over there that likes to drink beer and watch football. That's a good litmus test. Like how worried is that guy? That's not looking at the stock market every day like you are, crypto every day like you are. How worried is your mom who she's asking to make sure if you brush your teeth and did you get enough to eat? I mean, are those people really worried? Or are you reading too much financial Twitter? And probably if they're not worried, you're reading too much financial Twitter flood. And it's probably just a pullback. So look for major world events, like actual things. And if the stock market is going down for that, then you should really worry. So, there was no reason in October for it to go down. Now here we are. All right. Palantir. Oh, the Palantir. I got a friend of mine that you would get along great. Sarah Trade. I would introduce the two of you, but he would immediately fall in love with you, I think. Let's see. Palantir did a false breakout. Good. And triggered your bear spike indicator on what time frame? Aha. This is a trade. However, it is an uptrend. Doesn't matter. Since May, and we're statistically bullish month. I like that I like that. I like that a lot. I got a buddy of mine that really, really loves Palantir, and I need to point this out to him. But no, this is a trade. And let me refresh this. He loves Palantir. Like he can't stop talking about Palantir. And if the two of you got along, man, he does have a great time. So the only problem I see with this trade, and that's just a matter of like my specific rules, is risk and reward. And so I wish I'd been looking at this a little closer, but I was like, yeah, I've been kind of slacking. And of course, my friend's not going to tell me this either. So the only problem I have with this trade, other than it's got all the percentages, 100% ATR clearance, basically even from here. But essentially, what high that you're looking at is this one right here. One bar got above it, second bar closed in. This is the fact that it's in a bullish trend does not bother me again because we're looking at this from a contrarian perspective. Actually, if I do the manual input of the risk reward, if we take a short here, I think I know why. So let me give you a little tutorial on my spikes, which by the way are free if you just ask me for them, guys. I don't charge for them, even though there have been people that have impersonated me and gotten money from people. Unfortunately, I must report. But if you just send me a message on Discord with your TradingView username, I'll give you access to it. All it basically does is it shows that these bars right here went above the past high with a certain percentage, that being the ATR clearance, and then draws these two dots, which are the 2-to-1 risk-reward ratio and the 1-to-1 risk-reward ratio, if you give that the cross above the high is the stop. And then, of course, the red line is going to be the entry point. That's how the trade's set up. Now, the reason it draws these two right here is because it immediately draws the indicator based on the red line as it was there when the indicator fires. And so that makes it a 3-to-1 there. So when I was first looking at this, I was doing this manually. I was taking off everything. What I want to do is I want to make sure that I encapsulate the full trend which I'm going to start here, not here at earnings, but let's start at the low, the low proper. And that's going to put us up here. And if we look, we got a lot of supports here. That's the support. And so if we give that this is our level, and essentially that red line again is going to be based on the 50% of the last 9 bars. So 50% is 50%. And so we can validate that by saying that from this low to from the high that it made here down to the low, this is what I call like the impulse. You know, when something hits something and it price pulls it back. So within that range, now that's going to be $20.24. So that's our entry to short. Stop is still going to be that red cross, because what that lets us do is it lets us give us a little buffer over that high. And then we're going to put our target down at that support. And that's going to give us a 3.25 risk-reward ratio, which is proper. So I'm going to remove my bias. I'm going to take my friend out of this that loves Palantir and wants to have a single portfolio of just Palantir. And I'm going to say that this is a valid short trade. I'm going to, unfortunately, have to tell him that here in a little bit. Not much I can do about it now since the market's closed. Monday could open up a little bit differently. Not sure what this is, news and stuff like this. But, I mean, if I didn't know what it was, if people hadn't told me what it was, that it was the greatest AI company since whatever, I would just look at this as a chart and I would say, hey, that's a short. If we look at it from a larger perspective, I'm not sure if it's not still at the resistance yet, but let me draw the 50% from the all-time high to the low. That resistance is still up there at 25.46. But I think if you're going to take a short on it, now would be the time. And if you're long it, if you have calls, you should have done it when overextended there. But that's Palantir. So thanks for bringing that up. That's what I say. This is about idea generation, guys and girls. Thank you. All right, let's see here. I need to catch up on yours in just a second. So Tesla's revenue growth has been slowing and margins are shrinking. Well, the Cybertruck was a big miss in that the price and production is not as planned. I'm gonna be biased, guy. Look, maybe I'm wrong. Maybe Tesla isn't such a great company, but they've got the Model Y is going to be the best-selling car worldwide of any car, EV or gas. If you haven't seen what the self-driving can do, go watch on YouTube. It's pretty amazing. They're supercharging. If all these countries, if all these states are going to cease selling gas cars in 2030s, as some states have extremely done, and everyone is going to have to sell or buy or drive electric cars, is that a sustainable future? Well, it's a weird future because we don't actually have the infrastructure for it. But look, if we just assume that we're getting pushed, whether we like it or not, in the direction of electric cars, then we're going to want to take road trips. And as someone that has been taking road trips in a Tesla without much consternation, it's been pretty fun, pretty enjoyable. I do have to wait longer than, pumping my gas. Maybe I have to sit down and eat some food, and then I'm ready to go, as opposed to just pumping and then hopping back in and going. But that's the difference. People ask me all the time, like, oh, does it take a long time to charge? No, it doesn't. It takes like 20 minutes, tops. And then you're back on the road. So as someone that already knows that Tesla owns the best charging network for any car, and all these other car manufacturers getting into it, I just think that it's a damn good company. And price can fluctuate, but I don't know what kind of downside you're going to really appreciably get from it. Did you know that Tesla has never done any advertising? Like when you watch the Super Bowl or any sports TV, do you ever see some happy, smiling person driving a Tesla every 30 seconds? No. And you see a lot of other car manufacturers. Tesla's never put anything in advertising. They've just made a great product. What a concept. What a concept for business. How do you short that? You have to like really, really, really convince yourself of the negative aspects of something to like look at that holistically and say, no, that's not good. That's actually not a good thing. I can't get there. I can't get there. Let's see. What about free Bitcoin ETF fees? Burr. QQQ and SPY analysis? Yeah. All right. Well, I think I kind of touched on that a little bit earlier. SPY has oh wow, SPY did actually. Okay, so here we go into this whole ES versus. So as interest rates have gone up, in other words, being not zero, the futures, baked into futures and even options to that degree, there's an opportunity cost, because essentially when you take out futures, you're basically going on margin. In case you didn't know, and they're not going to tell you this overtly, when you use margin in your trading accounts, you're borrowing money. They don't just say like, oh yeah, sure, you can trade with more capital than you have because we're just that generous. No, they charge you like a daily interest rate for that margin that you have open. Go check your account. You'll see that it's there. And it wasn't very much. They still charged you for it when interest rates were zero, because they still like making that money off of you. But now that interest rates are not zero, it's probably more. So you might want to go check that if you've got a bunch of futures and or if you're doing a lot of futures and or margin trading. And of course, when you do that, you bake in a little bit of extrinsic, price to your futures contract. And so the difference between past contracts and current contracts makes a big difference in the price of futures. And I've had a very hard time squaring that circle this year when it comes to figuring out what instrument to use. But I think using SPY or using SPX to really say this is the analysis of the stock market, even they're a little bit different. But it's interesting that the SPY hit the year-to-date high today, the one that it set in July. So that's interesting, and that's kind of cool. And it's going to be interesting to see if Santa Claus can break this level next week. That's really the question. That's the entire SPY analysis. The SPY analysis is we're at the year-to-date high of SPY, and are we going to try to get the all-time high? Because when I look at this, and I just think about, like, if we had a big green bar like we had in late October, early November, followed by this, we're within striking distance of the all-time high. Who would have thought that in March of this year, when we were sitting at banking FUD and not really that, and really far from them? I mean, if you look at this chart in March, coming off of 2022, there's no way you would have thought that we'd be here today. No way. No way, no way, no how. And even when people back in October were complaining about how surely, the stock market was going to finish, everyone's always going to be more bearish than they should be, until you have a situation like like 2021, where you've had 12 consecutive months of new all-time highs. Then everyone gets bullish, just like everyone's bullish on Bitcoin right now after it's up 127% year to date. They weren't bullish on it back in January. They weren't bullish on it back in March when they were a good time to buy. Nobody was bullish on the stock market, but they're not really bullish now either, because people like to hate on the stock market. It's fun to say the stock market's going to crash. Yet, in any given year, it does quite well. It's up. You just need to. What people have asked me in the years when they know that I'm a trader, they ask me, like, at the beginning of the year, at the end of the year, like, what do you think the stock market's going to do this year? What do you think the stock market's going to go do next year? I say, it's going to be up. Like, really? But reasons. I was like, well, I'm making a guess like anyone else, except I'm making it based on statistics. In any given year, the stock market will be higher than it started. Could be wrong, but it's a really high probability bet to make. And even back in October, when we were at the lowest of the low, the stock market was still up 5%. I think when someone asked me this, it was maybe before that red bar, and it was still up 7%. And I was able to say then, do you realize that even though we're in this little dark days of October right here, the stock market is still up the average of any given year at plus 7%? Oh no, no, hair on fire. You're still doing just as good as any historical year. And so now, as we go into the Santa Claus rally, we're up 17% on a year. It's been a good year to be in stocks. It's been a good year being anything, pretty much, because everything pulled back. But you're going to have a hard time buying now. Oh, it's really tough to buy now because, man, you've got this that we're at right now as a resistance, and you've got the all-time high as a resistance. If here's my analysis, if we can get a good bar close, let's say next week, into this range, then we can start looking for basically a short covering rally, people doubting it, whatever. Price is going to be gravitationally pulled to that next all-time high. And even then, oof, man, that's it. Breaking it is probably going to be pretty high because once it gets there, people are going to be like, oh, holy crap, it's going. Then you get into the situation of a false breakout and overshoot. And that's what I'd be looking for next week is a false breakout of this resistance, the year-to-date high. So next week is going to be very critical to see how this Santa Claus rally plays out. We could hold this resistance, and I'll be looking for that too. But December is a fun month, and this is December 1st, so you guys pay attention. Pay attention. But yeah, right now, everything is at that level. I'm going to use SPY because futures are just not doing it for me. Futures, it's not there yet, basically. Futures is wonky because of the contract changes and how it changes the chart. See, it used to not do that. It used to not do that as much. If you look at the chart back here, and when we were doing, even in 2022, when interest rates were pretty much the same, there's no change. A little bit of a change. No big change there, you know? But here now, well, it's looking at past contracts. Now, the whole damn chart changes. And it really happens right there where, you know, interest rates started changing. Yeah, so it's been very, very hard. Very, very difficult. Actually, let's see. Interest rates started changing when? That's when the CPI changed. I think they started raising rates and, yeah, somewhere around there. All right. And as far as QQQ, broke its year-to-date high because tech stocks are more bullish. And it is definitely, well, let's see. Let me draw the line here. So it actually did this 2 weeks ago, right? Yeah. That's a hold. That's not a false breakout. I mean, you can see maybe some bearish action next week, but that's what I want to see, something break a resistance. You have 2 bars close to confirm that you broke that resistance. And you got it. You even had a little bit of price action come back down and tap it here. Now, to be fair, when I go down the daily, I'm going to see that we do have that situation where we have a close below the red line. So we may see some kind of a pullback, but nothing in the immediate present. I mean, what sticks out in my mind on futures, when you want to see a real reversal happen, a solid reversal you can bank on, it was that October CPI print from 2022, over a year ago, that created a spike there on the daily of the ES. I believe it was also on the S&P 500. Yeah, the SPY right there on October the 13th. That, which by the way, spike indicator found, because that's what it's supposed to do. It's supposed to find where it false breakout happens and then it closes back inside the range. And so that was the turn of the whole market. And if we get something like that next week, yeah, I'll be on here saying like, oh God, this is a spike. We got to do something about this. We got to go short the market. But I don't see it, guys. Everything wants to go up until it doesn't. I think you just got to ride the wave. It's the best bet. Nvidia back down to 400. Talked about Nvidia a little earlier, but I'll revisit it with that in mind. Let's see. 400 would put it back down to the bottom of the range. I would say what's really kind of playing into Nvidia right now is this is not quite a false breakout because it's just such a small gap above right here that it had 2 weeks ago. But I would say before 400, you might want to look at the 450 level, which is the 50% of this price action. 400 takes it down to the bottom of the range. See what it does at 450 if it gets there first. Watch that first. All right, let me go back to Jen's stuff. I don't want to ignore him. Let's see. Car. Avis. Looks gross. ZM. Zoom. Are we working more at home or less at home? See, I'm getting kind of fundamental here, you know, and I can poke at you a little bit. But I mean, I say this, but then like as I was looking today, what is it like? Plug Power is up like 14%. It's up. Hold on. Plug Power is up. This is a weekly. Hang on. Today, Plug Power was up 14%. Fine, have fun. Fine. You know but you need to understand that these dead stocks are basically fun tickets because they're so thinly traded they can move like this, but they're not worthy of investment anymore because nobody's no. Find me a trade, and I might trade it, but as far as like if I was a bag holder of this, I'd be taking any opportunity to get out I could. P-Car. Are you just trolling me here? I remember these things. Was this like one from like, oh no, that's going pretty good. I'm thinking about something different. That's like something that Casey, which I don't see today in the chat. Casey, you there? He would be taking that as a breakout of a new all-time high. He would like that. I'm sure he's probably taking that. Let's see. Are you talking to me there? Let me go down a little bit. You bought ZM in November. I bought that in November too. What is white lung pneumonia? Or is that going to get me? Well, I'm not monetized on YouTube anyway. Is that the new pandemic? See, is this going to be like what? Is it okay? Yeah. So it was monkeypox last year, and our friend was like really scared of that. Do you remember that? Do you remember when monkeypox was going around, and he was like, oh, "I'm watching the science on this. I want to find out if monkeypox is going to be next." I mean, and he was our good friend that was like very sensitive to the Wu flu, you know, and us following all the advice about it, you know. Look, we're always going to, it's like generals are always going to fight the last war. I said this, you know, a year or two ago. We're going to be constant. The news is going to put up something about every little bug or every little disease that comes our way for the next couple of years. You know why? Because it's going to get clicks. Because we're already tuned into it. And they're going to go nowhere. It's kind of like how everyone's still thinking we're going to get a housing crash after 2008. People are always going to be attuned to the last major fear. And the things that really cause the most economic damage are the things that nobody sees coming. And so I draw two things from that. Number one, whatever people are most concerned about is not going to be the thing that's going to matter. It just never is. And so when people are all worried about inflation going to destroy the economy, I'm not, because everyone is thinking that way and hedged against it. Therefore, it's not going to be that big of a deal if something bad does happen, in inflation particularly. And number two, since we never know what's going to be the thing that brings about our end, why worry? Take a load off. Don't worry so much. Stock market is going to crash. Yeah, probably in the future, but I don't know when, and I don't know why. Doesn't that scare you? I mean, I would prefer to be on the bearish side of it when it happens, and that's what I'll be looking for. But no, it doesn't scare me because I know how to buy puts. So it's just, I know some boomers, like literal boomers, not me boomer, my age boomers, but literal people in their retirement ages that have been in cash for over a decade, U.S. dollars cash in their 401ks. And I've talked to them over the years, and they're always they're like, oh, every company has too much debt. They're all bankrupt under their balance sheets. I can't buy anything. I'm like, okay, bro. Well, bro, okay, pa. What are you going to do? I was like, well, I'm going to wait for the stock market to crash. It's coming. I was like, okay. All right, well, then you talk to him in 2022. It's like, hey, stock market's crashing. It's like, oh, it's not crashing enough. Okay. Well, here we are, back at the all-time high again. What you going to do? Inflation was 13%. Those hundreds of thousands of dollars can't buy as much stock anymore. But you know what? I'm not in my 60s, so I don't know what that life is like. So I'm gonna lay off them a little bit. All right, let's wrap this thing up. We're going through that list. If you got things to look at, post it in the chat ASAP, because I'm getting HURNGY. See, I'm losing my brain. I can't spell anymore. I was around my little kids at Thanksgiving, like my nephews and niece, my nieces and my nephew, and I'm now going to have to spell things because I'm fully going to embrace that crazy uncle role. They're going to roll their eyes at me, and I'm going to make. I can't wait. Can't wait to be the crazy uncle. But I have to spell, when I really want to, speak, like very vociferously and passionately. I need to spell. Kind of learn how to spell. All right. Unity software. Well, I see there's a nice little spike there on earnings. And it didn't pull back to the red line, though, unfortunately. But, yeah, it's not breaking out of the cloud either. Got nothing on that. Let's see. ARC Innovation. As a tradable instrument, I really don't like to trade or use technical analysis on ETFs or leverage products because I'd rather do that on underlying stuff. I'd rather own individual stocks than, I know you love Kathy, but people don't love her as much as they used to. Everyone loved her in 2020 because they were doing the things that they were doing, except she was doing it with billions of dollars. Cigna, this came up in discussion this week. I didn't see the trade there. I think there are some merger talks, but talk is cheap. I'm not sure if they're up from that. More power to them, but it didn't hit a proper level for me. SPG, you're kind of salty on it because you took some profit. Well, you're always going to be salty on something that you take profit and it keeps going up. I would say that for Simon Property Group, which by the way owns a bunch of malls, or at least that's what they used to do. I'm surprised that if you made money on that, then you deserve to be a contrarian because it's one of those things that's patently obvious that nobody goes to malls anymore. But I guess they've taken the hit they're going to take back in 2020 and just kind of sitting out there. They look like any other REIT, real estate investment trust. I remember one that I'm still kind of bag holding is this MORT, which is a mortgage REIT. That sucks. I've been just basically letting this thing dividend reinvest since I bought it. I think I probably bought it. I have to go back and look, but I may have even bought it up here in like the 17. 17 seems to come out now. So this is a fail on my part, trying to not use technical analysis on something, but oh well, I make mistakes. But I wanted to have a REIT in my portfolio because like REITs were like something else to do in 2021, 2022. So yeah, kick myself for that. All right, let's see. TPR. Tapestry. That's a nice little spike there. Right at oh, I like this. See, why can't you tell me about this thing when the spikes happen? Bing. Oh, that's gorgeous. Oh, that's great. Look at that. You got plenty of room up to 35.53. I'll tell you one thing that would have kind of concerned me is right before earnings, taking a trade like that. It would have taken a pair of cojones that I may not have had. But if I didn't know the earnings, that's one of the drawbacks for stocks is you have earnings. It really is. Earnings is what can make you some money, but it can also bust a good trade. But this is just in hindsight a really, really good spike trade because it's purple, so that means it's a secondary spike. And what happened was you had the indicator, which, by the way, if anyone tries to sell you my indicator, don't buy it. It's free. Basically, this bar on November the 1st came below it. This is queuing off this low right here from October. This red bar broke below it. The second bar, not if it was a primary spike, if it was a normal red or green, it would happen on this bar and be red or green, the shading. But instead, I give it a little bit of play on the second bar, and that's a secondary spike area with purple. Purple's for bullish because I can't use green. But the second bar closed above the red line, and that triggered it. And then, of course, again, that what I call my impulse of price off that low happened. There's that 50% at 27.14. That's your entry point on November the 7th. And in context, that spike is happening at a low from May of 2022. That's another thing. Whenever I see a spike, I want it to happen in context. In other words, I want to have it at like a 50% level or a past major high or low. That's what I want to see. That is where you kind of combine the two different elements of price action that I like to look for, and you set up for a very, very good trade. Doesn't happen very often. Got to be very selective, very picky. But then, of course, we have our two dots here. The first dot is the 2-to-1 risk-reward ratio, and the next dot is the 3-to-1 risk-reward ratio. And that is well within our 50% of this big old trend that started in July. And so a recovery back to 35.53 is well within that range. And that sets up for great. That looks great. Okay, so you can send me a message on Discord. Links below for it. I don't really check my YouTube comments that much. Sorry, Joe. But I'll send it to you. I'll add you to the access list on TradingView for it. As far as the how-to, this is kind of how we get into this realm of where I probably should charge people for like a class, but not wanting to bother myself with the obligation. Basically, on my Discord, I have a channel where people can ask questions, and they do. And I also will, when I see instances like this, I'll put, here is the example of a textbook, even though I haven't written the textbook, maybe I should, of how to use these spikes. But in the other way of how to do it is you sitting right here and providing me with an example that I can teach from more extemporaneously than from a book. And that really comes from the fact that I see a lot of people selling courses and selling indicators, and I just find that very off-putting. But I do have to acknowledge that is what people do. But so far, I'd really rather people just learn by coming to me and say, like, hey, here's an example. And I'll spend as much time as you want. I'll put myself out there for people to ask me questions. And that's my way of like giving back and not taking people's money. And that's just my way of doing things, okay? I don't want to take people's money. I really don't. I'd rather make my money trading and investing. But that's not how most people do, because trading and investing is actually kind of hard. It is. But that's why I want to do that instead. And so if you really just ask me, hey, here's a spike, like Sarah did earlier, where she's like, hey, here's a spike on Palantir. I'm like, that makes me feel really good, because that means that people are using this and finding good trades with it. And that makes me feel good. That makes me feel good. So, yeah. But keep bothering me. Keep bothering me, Jen. I say that, but I don't really do. Are you getting tired of me asking you to bother me and then me not actually start selling classes? I hope not. All right. Let's start wrapping up. SoFi. Yeah, we'll look at SoFi. Let's see. Where you pinged me. Fun tickets is correct. Oh, yeah, I know. Yeah, it's a long game. All right. Let's see here. TPR. All right, let's do TPR and then SoFi. And I think that's what about end of year tax loss capital? That's one of those things, kind of like on-chain analysis, that makes sense. But in my anecdotal and statistically backed experience, the end of the year is pretty damn bullish. And that's always kind of been a wonder in my head too about, okay, well, end of the year, people need to like sell stuff. And, but, you know, as my broker said years ago when I asked him these amateur questions, he said, well, when people are selling, somebody's buying. Um, I just don't know. I don't know why things are the way they are. I kind of know why the sky's blue. You know, it's because of, you know, the color of, you know, oxygen. When light comes through, it filters out everything but. Or maybe it's the reverse of that. I'm not sure. I'm not sure why stocks go up in December when you would think people would be selling them to capture things at the end of the year, but they do. So, good thought. I had that thought myself. Why don't stocks go down? Because reasons, but they don't. All right, Russell. What's the Russell? Is it ISWM? Yeah. Honestly, I don't look at the Russell that much. Um, Mainly because it looks like this. I don't see a trade here. I think the SPY is. I mean, I don't blame you for doing the Russell because it has a little more volatility, has a little more potential. It's the small. It's a wider. Well, it's not. Yes, it's wider than the S&P 500, but I don't. I would rather look at the S&P. I don't have an opinion about the Russell. I don't have an analysis of it because it's not sitting in a major high or low. It's not hitting a 50%, and I don't see a spike. And I'm not gonna. I don't feel bad just not bringing out a bunch of lines and trying to dazzle people with BS. If I don't see a trade, if I don't see a setup, if I don't see something clear, I'm just gonna let this market keep going until it gives me a signal. And right now, Russell, I don't see anything. So let's see here. But like I said, SPY, which is going to drive the market, that is at a high. And so next week is going to be very critical. SoFi. SoFi. Oh, let's see. From the high? What about from the low? I don't see it. I don't see any. I don't see it bullish. Sorry, Vlad. I don't see. I mean, you got a little bullish run right here, but 807. That's going to be kind of the resistance that it's going to have to break if it's going to go any higher. I don't see a reason to buy it either. So, all right. Let's see. And finally, TPR. Oh, we did look at Tapestry. Oh, yeah, we were already looking at that earlier. Okay, so I'm done with the list. All right, folks. Thanks for joining me this Friday. I'll be back again like normal on Friday next week because we're just in December. We're not Santa Claus time yet, but we'll worry about Christmas when it comes. But in the meantime, I think I would leave you guys with this. Everything is bullish. I think the stock market is coming up. It is at a high, so be careful. Bitcoin is just... When you see something like this is just my opinion. It doesn't inspire me to buy it. What I see is just kind of like a... those highs rather than boom. It's facing somebody's selling, and people that buy the narratives are going to get trapped. It's just this is just not a bull trend that really inspires confidence in me. So stocks go up for year-end bonuses. Well, there you go. There's a reason. All right, folks. See you next week. Thanks for joining me. As always, trade wisely. Bye-bye.